Today we're taking a look at small cap funds and finding out how we should add them to our portfolio and make the most of them when they do give those phenomenal returns. Let's bring in Dhirendra Kumar, the CEO of Value Research, who joins us on the show every day. Dhirendra, thank you so much for joining us. Let's talk about the small cap universe. Now, the BSE small cap is down about 20% over the last year. The small cap fund category among mutual funds is down about 5% on an average. Now, what's your advice to investors who have small cap funds in their portfolios? There might be a temptation to pull that money out. Is that something you would advise?
Small caps are like that only. Small caps in a struggling market will struggle much more, and they crumble in a falling market. So I don't think there is a surprise here, but to benefit from small cap, it's important to ride through the full market cycle. The other important thing which an investor should control in his own portfolio, that small cap is not a sizable part of your whole portfolio. All your money should not be invested into small cap. It should not even be invested, it should not be even 30-40%. If it is 10-15% of your overall portfolio, stay put. This is not the best time to exit them. They certainly do well in a rising market and do much better, and the big gains are often derived from the small caps. And looking at the small cap fund universe, I find them very impressive, though they are in a rough weather right now.
But Dhirendra, would you recommend a fund that possibly blends small and mid cap instead of a dominantly small cap fund? Is that a better way to approach the small cap universe?
Yes, for investors who can't manage these allocations and cannot periodically rebalance it, cannot put up with or are not comfortable with the extreme volatility that we see or extreme decline in value which we see in case of small caps, then it is better for those investors to be into a larger mid-cap fund or a multi-cap fund which are at liberty or have enough flexibility to be into large, mid and small cap as well. You should not be making this choice. But if you have the understanding, if you are willing to assume that risk, and if you are an aggressive investor, by all means have the small cap. So it entirely depends on how you want to approach your equity investment.
Well, there's one particular fund I want to discuss, the Franklin Indian Small Companies, which has done really well. Tell us what it's doing differently and why it's done so well over the last 1 year.
I think the quality of the portfolio and being right and, being in a fairly offbeat, carrying an offbeat portfolio, and some of the stocks have, some of the stock ideas have done brilliantly even in a very tough market. So I would say that I would attribute it to the brilliance, not necessarily all of it to the brilliance of the fund manager, but selectivity which has worked well. So I would not like to call it entirely on luck, but selectivity, quality focus, and bit of luck.
Very quickly, we have a query from one of our viewers. Rajshekhar has written in. He's been investing 5,000 rupees every month in the Reliance Small Cap Fund through an SIP for 2 years, Dhirendra. His investment objective is to build a corpus of 2 crore rupees over the next 20 to 25 years. He wants to know if he should continue investing in this fund because he's not very impressed with the returns it's showing right now.
As I said earlier, that making investment entirely into a small cap fund might prove extremely rewarding over such time frame. But small cap is a kind of fund where there will be huge difference between the performance. So I would say that diversify across 2-3 funds, 2-3 small cap fund, assuming that you are willing to take this risk of being invested into small cap.
All right, Dhirendra, many thanks for joining us on the show and answering our questions. If you have a question for Dhirendra Kumar, write to us on the email ID that's on your screen right now.